Okay, let's get into stock market technical analysis. Let's use the charts, see what we got going on. If you guys are finding value, drop me a thumbs up. Appreciate it. Feel free to subscribe and follow along. And if you're interested in getting additional market insights and additional trade setups and charts and trade ideas, link in the description below for the private member group. Okay, so what we've got, let me zoom in. Triple Qs. We're looking at an hourly chart here. There's kind of the levels that we're looking at right now is there's a gap. If I kind of roll out, there's the gap right there. Okay, there's a gap to fill, and that gap fill is right around 493.42. Okay, so we've started to pop. Here's resistance right here. You can see that's at about 45.54, and we're starting to pop through that resistance this morning. So a pop above that resistance, if it holds, because again, this is an hourly chart, so it might not stick. The hour candle hasn't closed yet. But if it does hold, then I could see us running up to fill that gap. Okay, that's about 493.42. Now that's maximum upside for me. I think that's where, from my perspective, I think the rally in triple Qs ends right around that level, and then we head lower. If we go above there, then we're likely going to hit the all-time highs and go on to make new all-time highs. So in general, one way to play it is, at least what I'll be looking for, is shorting here at about at that gap fill or close to. Basically, I'm not going to wait for the gap to completely fill because all eyes are going to be on that gap. So you'll want to step in early. But in general, I'll be looking for shorting right there. And then if we pop above that level, and especially if we get an hourly close above there, I'll stop out. Okay, so that's kind of my stop area. And what I'm expecting is if we go on to fill the gap or at least get close, we rally up, and then we're going to start to roll over and head, start to make that next leg lower. So that's what I'm anticipating. And then, of course, if we rally into the gap, fill it, and then maybe grind around and pop the gap, then I'll stop out. All right, that's my stop zone above that gap. Now, let's look at SPY. The S&P 500. S&P 500 is making all-time new highs. Okay, so in general, there's really no resistance overhead except for the most recent high right there. But in general, we don't have any real resistance. So that is one thing. But you have to understand the S&P 500, I think it's something like 30% of the S&P 500 is basically the large cap tech stocks. So in general, wherever those large cap tech stocks go is where the S&P 500 is going to go. So that's why for me, triple Qs is the most important chart. Again, also I'm on an hourly chart, and we are making divergence. We do have negative divergence on the hourly. There it is for RSI, and the PPO is right there. So we're popping up, making new highs, but they're divergent highs, and they're very likely going to get sold into. And oftentimes we'll see kind of a new divergent high, and then it gets sold into. So the new high is not the time to be extremely bullish typically, especially when you have that negative divergence. The new high is oftentimes the time to be looking to either enter shorts or exit longs, depending on your trading style. Flipping over to some of the stocks that really matter, the large cap tech stocks. Nvidia, I think it's probably the most important stock right now. It's really where the momentum has been at. So when this momentum dies, you're likely going to see a lot of the momentum in the large cap tech stocks die. Nvidia kind of breaking out a little bit right here, but the biggest thing that I've noticed is we're really just compressing within this isometrical triangle. And it's kind of setting up for it's coiling. It's setting up for a move. Now the trend clearly is up. All right, the larger trend. If I roll back on the daily chart, we're holding that trend, and it's definitely up. But this coiling price action, this isometrical triangle, is an indecision pattern that can break either way. All right, can break up, and that's obviously the trend, or can break down and can break the larger trend. Now, a break to the downside would likely usher in a pretty sizable move, and we should flush. I think we'll flush straight down to about 96. There's a gap to fill right there on the daily chart, and you can see that's former resistance. It's a pretty good key level. And then the 200-day will be there as well. So I think it would be a break straight down to that level. And then the dip buyers will likely step in and will maybe backtest the trend line. But in general, that would be the first level of support. It would be about that 96.50-ish level. Now, we also, the reason why, even though the trend is up, the reason why I think we're going to break to the downside is we do have, we've got momentum is dropping essentially. And you also see that this is a divergence right here. There's negative divergence right there in Nvidia. So that was this last high, this big high right up in here, and it's also a bearish engulfing, and it's marked the high in Nvidia so far, and this was the high back in June. That was a divergent high, all right, and so they sold into that, and ever since then we've really been making lower highs. We're also making higher lows. So again, it's that coiling pattern. We need to see which way this one breaks before really anything happens. And ultimately, the triple Qs is probably not going to break down until you see a breakdown in Nvidia. That's really been my key thing, is I've been pointing out that without a breakdown in Nvidia, if you don't have a big sell signal in Nvidia, we're not going to get the big sell signal in triple Qs, in the tech stocks, because investors will be emboldened as long as Nvidia's holding trend. You're not going to get that fear trade. Tesla, this one's been kind of rallying lately, but bigger picture, and this is kind of what I really have been looking at. If I look at the weekly chart in Tesla, you'll see here that clearly Tesla has been in a bear market. It topped back in November of 2021, and we have this downtrend line here to watch that Tesla's been basically being rejected at. And if you zoom in, you can see as of now we're above that trend line. All right, it's technically a breakout, but this is a weekly chart, so we do have to see how this thing closes on Friday to determine if this is actually going to be like a breakout in this stock, and then that would be the end of the downtrend. I don't think we're going to get it. Honestly, I think we're going to get rejected, and I think Tesla's just kind of rallying intra-week, but I ultimately am looking for that to not stick by the end of the week. If I look at the daily chart, we could go a little higher, because if we pop up here in this area, it's going to put in a divergent high. We'll put in it'll be a negative divergence, and then ultimately I look for that to get rejected and sell down by the end of the week. So we'll see. I'm kind of just watching this one for now. GM, I like this one short. Again, on the daily chart, you've got support. This is an uptrend, all right? This was clear uptrend. Broke support. It even held it right there for 2 days. Even when it broke down, if I zoom in, you can see it broke down right there. But they recovered it, and it held support. Very next day, though, was the actual breakdown right there. All right, so that was the sell signal, an official sell signal. And then it back tested for about a week, rejected, ran back up to resistance. All right, so that's been the top, and that's so far it's been rejected there as well. So you can see, really, that's all that matters now is you've got this level, 3 reactions to validate that as resistance. It's about 49.87, call it 50, and then so that's your resistance. A daily close, or an hourly close above that, impulsively above it, not just by a couple pennies, would be a breakout. And if you're short, you'd want to stop out on that event. Otherwise, we're getting rejected at resistance. I think we're probably heading down. We got some support right about here at 46, but ultimately I think we probably head lower. All right, I'm looking for a lot lower prices. My target on this one for right now is about this level. It's all the way down here. It's about 35.64. There's a gap to fill there. There's also another gap way down here at 20.29. That could be a final target, but for now, I think we can head down to about 35.70. Should get a bounce down at that level. And we'll probably stop at the 200 and get a bounce at the 200 as well. Dip buyers are always going to buy the 200, so you should see at least a reaction. Doesn't mean we're going to hold, and I don't think you get a big bounce, but maybe a minor bounce off of that and then continued lower. The financials look kind of weak to me. They're actually selling off today. So financials down. Tech seems to be holding up. We got some support right here. It's about 44.14. You can see there's reaction. There's a reaction. Little gap up right there. And then they held that level right through here as well. So that's your key level. That's your pivot level from what I can tell, 44.13. Break below that and financials should go a lot lower. And it looks like we're heading down there again to go test it. Also, we just recently made a new high. There's your new high right there, and yet less momentum, so that's negative divergence. Tells me that's likely going to get sold into, and it is. So yeah, I think we head down to 44.13-ish. Probably get a reaction there. Bulls will try to hold that level, and ultimately a break below that level would be a major sell signal in the financial sector. What's not helping the financial sector today is the credit cards, MasterCard and Visa. So here's MasterCard. And I already pointed this trade out earlier this morning to the private member group, but you've got support. This is a daily chart. Support kind of all through here. And that, as of right now, on the daily chart is a sell signal. That's a break of trend. Now, we obviously have to close the day below, but you go down to the hourly chart and it's pretty obvious that we've broken trend on the hourly chart. If I kind of zoom out, you can really see the reactions on the hourly. There's one, there's a couple, and that is a break of trend on the hourly chart. So this one has broken trend. I mean, this candle was a close below that trend. So we've broken trend on the hourly chart, and it tells me that we're likely going to see that breakdown in the daily. So it's a sell signal, at least on the hourly. And then if I go to Visa, this one's very cleanly broken. There's an hourly chart of Visa. You can see support, lots of reactions. And we gap down, clear hourly breakdown. That's a sell signal all day long on Visa on the hourly chart. And then if I go to the daily, there it is. So they'd have to rally this thing up quite a bit to recover that support line in Visa. It's, not very likely that's going to happen. It could, but, something to watch. So we've got a sell signal from what I can tell on MasterCard and Visa. Those are big players in the financial sector. You also have JP Morgan. JP Morgan, you can see it's kind of flagging out. I mean, you've got this big move down and then you're just flagging. And then, it's telling me that we're likely going to see a push down to the 200-day. And then there's some good support right down here on JP Morgan. It's about 190, we'll call it 191. Good support right down there. So from what I can tell, it looks like that's the direction JP Morgan's going to go. I would just need, we just need to see some sort of a rejection off kind of this pattern right here, some sort of big red candle, and then that should bring in that push down to that 191 area. Gold continues. This is GDX, your gold miners, but gold, these miners, they're kind of setting up in this bearish rising wedge pattern, and that has not really been negated. So there's no sell signal. Looks like we're going to push back up into that resistance area. So gold's just continuing to kind of wedge out. So nothing to really do there. And then I'm looking, the two that I'm watching is GDX and the Newmont. Newmont being the largest gold miner, and same pattern, bearish rising wedge, negative divergence. Just need that sell signal, the break of this wedge. So this one we just have to wait on, and I think we're going to get it. The miners to me look like short setups, but they're just not actionable yet, so it's a waiting game on that one. Okay, so that's really all I got. Everything else I'll just kind of send out to the private member group as I continue to scan the market. So I'll get the video out. Drop me a thumbs up on your way out. Catch you guys on the next one.